Hello and welcome to this video in which we're going to take a closer look at the market strength indicator from quantum trading and some of the many ways that you can use it, the different applications and the different chart configurations, and indeed the different instruments that you can load up into the indicator, whether you're looking for strength, weakness, strong trends, reversals. You can do it all with this indicator. And I hope by now you've seen the introductory video, which covers some of the basics of why and how we developed it, and from there, how we can apply it in a myriad of different ways, of which I've started here with one of the simplest, which is to use it for futures. And in this case, I've loaded up 4 of the major indices. I've got the NQ, the YM, the ES, and the Russell. And against that, I've counterbalanced it with the VIX future, the VX. So as you can see, what we've set up here are 3 time frames, the 5-minute, the 10-minute, and the 15-minute on the right-hand side. And as I say, we have the 4 index futures, the NQ, the YM, the ES, and the Russell for September. And counterbalancing that, we've got the VIX, the VX, which is the VIX futures contract from CBOE. And the reason I've set this up is to demonstrate in a very simple way, first of all, the inverse relationship between the VIX and the indices, which is very, very clear to see. As you can see across all 3 timeframes, this is the VIX at the bottom, and these are our indices at the top. And we can see the inverse relationship very clearly, and it's just starting to develop right over here on the 15-minute time frame. But you can also see it very clearly here, where we've got the VIX up here at the top, almost getting up into the 80, 85 area. And then down at the bottom here, we've got very weak sentiment for the indices, counterbalancing and inversely related to the VIX future itself, which is what we expect to see, which is one of the classical ways of, if you're an index futures trader, or indeed if you're just a stock trader, a day trader, an intraday trader, it doesn't matter. You need to have the VIX futures up somewhere. And also we've got the VIX itself, the cash indices, if you like. And we've also got added to that more recently, if you're not aware of it, we've got the 9-day VIX and also the 1-day VIX now, which is the latest to join the VIX family, if you will. But in terms of the VIX future, very important to have that sentiment because it works inversely and it gives you another relationship to key into when you are either trading index futures or whether you're trading sentiment, whether you're trading stocks, ETFs, whatever it is. That inverse relationship is invaluable in helping to identify potential turning points. And of course, on the VIX futures as well, as you'll see in a minute, I've set up another workspace really to split this out into a very simple example for you. You'll see also that we have volume to help us with our VIX futures in the same way we do with any other chart. So this is a very classical relationship. And what it also tells us is whether sentiment across the market for stocks, for indices in particular, is universal. In other words, by that I mean, are all the index futures, are they all indices, whether they're cash or futures, are they all moving in the same direction? In this case, we see that's pretty much true. You can see how the 4 of them pretty much follow one another. So we can be assured that whatever we're seeing, if we're trading a single index or if we're trading a stock, and we're seeing this represented on the indicator, on the market strength indicator, then we know that market strength is universal. In other words, it's universal across the complex, if you will, very similar to the way we look at things in the currency world, where we're looking for universal sentiment. We want to be trading with the universal sentiment of the market. Now, it's perfectly fine, and we see this quite a lot. We see divergence. For example, we might see the NQ spike up, and the others move in the opposite direction, or vice versa. We might see the ES take off and move counter to the NQ and the YM. We see this all the time. But if we're trading intraday, we really want to see sentiment universal because it means risk on whatever it is we're doing is going to be that much lower. Now, if we are trading against the dominant trend, in other words, if we're trading, let's say we're trading NQ or an NQ related stock, and that is moving higher against maybe the other indices, that's fine as long as we're aware of it, and that will be highlighted very, very easily with the market strength indicator in this very clear, unequivocal way. So this, as I say, is a very classical setup with the VIX, with whatever indices we've got. And of course, I will also show you this with other aspects. We'll look at ETFs, and we'll also look at commodities in the futures world, and we'll also look at stocks, of course, also. But I wanted to start here because I think this is a very good platform of learning of how to use the indicator and how to set it up against other markets and what that can reveal as a result. Now, what I've also done here is to set up another workspace, which, as you'll see, breaks this out into one index. So let's do that now. And here we are. And as you can see, we now have, I've reduced this to one market strength indicator on the left-hand side, which I've got set to 5 minute. And then I have 6 charts. The top line of charts is the 1 minute, 3 minute, and 5 minute for the ES index itself. And then below that, I've got the VX set up to exactly the same time frames to mirror that. So we are now looking at this index in isolation across the time horizons and with our VIX below, which give us that wonderful inverse relationship. You can see it very strongly here. We start to take off at this level here. On up we go, strong trend rising, and we see that into a strong trend falling in terms of the VIX futures, which is what we expect to see. And of course, as I mentioned just now, we also have our volume here to help us in the same way that we use volume price analysis here. And I've also got the accumulation distribution indicator on these particular time frames as well. And over on our market strength indicator here on the left-hand side, what we're looking for here, if we're looking for a reversal, which is absolutely fine. There are many, many different ways to use this indicator, and it really depends on your attitude towards risk. If you're comfortable taking more risk, then you may well be looking for those reversal opportunities up at the top here. Once we start to get up into the 80s and 90s on the indicator, then you may well be looking for reversal opportunities. Now, reversal opportunities carry more risk, and they also require you to be patient because it's not always the case that a reversal will take place instantly. Often, the market will move into a congestion period before it reverses. And what that means is if you're going to trade reversals, you have to set your stop loss that much wider to allow for the inevitable buffering that occurs at these levels, which is absolutely fine because the payoff is, and this is what all trading and investing comes down to, if you're prepared to put more risk on the table, which clearly you are as a reversal trader because you're doing that by virtue of a much wider stop loss to allow for the congestion and buffering that will go on at these peaks and troughs, then you are rewarded by getting into that trend much, much earlier. And that's the payoff. Now, if you're a trend trader and you're not comfortable with jumping on a reversal or waiting for a reversal and the higher risk that requires, then you're going to jump onto the trend once it's underway. And the analogy I've used many times is of a train. The reversal trader is sitting on the train at the platform waiting for it to depart. The trend trader, on the other hand, is jumping on a moving train once it's underway. And in terms of trading and investing, your stop loss is going to be that much tighter because there isn't so much risk. You're already trading a trend that's developing and therefore is underway. As you can see here, we've got this nice trend lower. We've got rising volume here. So you in turn will not have to put so much risk on the table. But then, of course, you've given up some of maybe the start of this or maybe even higher up here. You've given up some of this. You're jumping on lower down the trend, and therefore the trend that's already been and gone, you can't recoup that. You're just simply joining a trend underway, but at a much lower risk profile because you're putting a much tighter stop loss on. And that's the beauty of the market strength indicator. What we're looking at, if you're a reversal trader, you're looking for those opportunities where the market is overbought, as it was here, or oversold down at the bottom. And then you're looking for these strong trends developing, and the inclination of the line to the chart will give you a very strong clue as to the strength. If it's very steep, as it was here, then it's a very strong trend. And of course, in addition to this layout, we will be using our previous one where we're using the MSI in multiple time frames along with other charts as well. But I wanted to split this out in this way because I think it makes it very clear, and again, a very classical way to set up a workspace with your market's strength indicator on the left-hand side, which is giving you these heads up to oversold and overbought regions, opportunities, and then the strength of the trend as it develops, just on a one-to-one basis. And then you're combining that with your time frame charts and also incorporating the VIX, which is giving you that inverse relationship. So you're really combining everything here in one complete workspace for the ES. And I think it's a very neat and classical way of doing it. Perhaps you may have other ideas, but typically we use 3 time frames. And as I say here, we've also incorporated the VIX to really pull the whole thing together and give us much more confidence, because it is about confidence. We're never going to use one chart. We're never going to use one indicator. But this, I think, is a real nice blend of bringing it all together in one place, and a very simple place to start. And you can, of course, you can adapt this in many different ways. We could be looking at, we could have more indices, for example, on our MSI on the left-hand side. This could be a commodity, it could be an ETF, it could be a stock. Lots and lots of different ways of using the indicator. So I hope that's given you some ideas to start with. Lots more to come as always. Thanks for watching. See you soon, and bye for now.